Okay, so we're starting the video off here and we're looking at Bitcoin, 5 years of price action, $1,000 investment. What does that turn into? Now, what are you comparing it to? You're comparing it to gold, S&P, NASDAQ. That's sort of the main three, investment categories that most people park their money into. But you can see over a 5-year window that it's not even close. Bitcoin falls down because of the volatility right now. You see it's like 1900, S&P's 13, 1400, but look what is still happening. Bitcoin is steadily starting to widen the gap. Late 23 and 2024, look what happens. That gap continues to widen. So people that aren't using the denominator for Bitcoin and only looking at the dollar value, you're missing out on life-changing gains. It's not even close. Here's a snapshot of 5-year window. You can extrapolate this over any asset class, 5 years, 10 years, 15 years. If you don't get it, you're not going to get it. We'll get into this a little bit more at the end of this video. Make sure you watch to the end. And with that, what's happening, Crypto Crew? Sean's coming back at you, another cryptocurrency video. Getting straight into it, shout out to Tech Dev. We see similarities and confluences in the chart. Right here, 2012, you have this bump and run, higher low, rinse repeat into 2013, new all-time high. 2016, higher low, new all-time high. 2020, higher low, new all-time high the following year. 2025, rinse repeat. We're on the 4-year cycle. The business cycle, it sort of corresponds with the presidential cycle, Bitcoin's halving cycle. This is the liquidity adjusted business cycle. It's all interconnected, guys. As you see, we're getting ready to do the rate cuts, which means there's stimulus that's going to happen that's going to pump up all markets. So this isn't rocket science, just understanding the macroeconomics and what's going on behind the curtain. You can sort of see what's happening going into 2026. Rinse and repeat. Right here, this is old, but we just wanted to remind you guys, one Bitcoin may be worth $1 billion. This is from Fidelity. And for those who don't know, Fidelity has their own Bitcoin ETF, meaning they're buying the hard asset, Bitcoin, and then giving it into an ETF wrapper to all of its customers. So just keep this in mind. Taking a look at Bitcoin at the current time of this recording, Bitcoin is back up to 114,000. What do we see? What do we anticipate? Looking at the price action, Bitcoin had this bullish engulfing green candle here. You see that this dotted line, we hit our head on this once. The last time we blasted through this, we came back and back tested it twice. And then sort of like we were doing a double bottom, fell through it, hit our head, potentially bottomed out, and now we're back above it. Where's the next levels to pay attention to? If Bitcoin holds above this level around the $111,000 range, we could start to see a stair step up to this white trend line that acted as macro resistance. January of 21 was around 106. We hit our head on it around 119, actually wicked up to 123. And the previous all-time high is up to 124,000. So if we just stair step our way up, this could be putting in new all-time highs sooner rather than later. Definitely bullish for markets. mtplf, metaplanet, seems like it potentially has bottomed out. We had a 17% increase in the price. Is the blood over with in the market? Bitcoin bros have been telling you this is a buying opportunity. So right here, let's clean this up. Could we come down farther? Potentially. We're not out the woods yet. If we come up here, the level to pay attention to is between the $6.50 to $7 range. And we could come back down and sort of go into this wedge pattern. And we want to see, this is a 50% chance of breaking down or breaking up. But all metrics are still pointing up and to the right as we came into this in a bullish fashion. And if we come back down to the support level, this is the support level to pay attention to. So could we come lower? Are we out the woods yet? Not quite yet. Time will definitely tell. Now, getting into what we really want to get into for the video. This is very important, guys. If you guys aren't using the correct denominator, you're going to mess this up. You're going to mess your investment thesis up. So what is this chart we're looking at here? This is the MSPUS, the median sales price of houses sold for the United States. And look at the price data. It's all the way back in 1963. If you look to the right of the charts, you see over here the price of a house in 1963 was about 17, almost 18,000. And what has happened since then? The trend's your friend to the end. It's just up and to the right. So huge appreciation since the 60s. If you bought a house back there and then held it, you had a 2,200%, a 22x in your home valuation just by holding it. The house didn't get better, the money got more worse. So why are we showing you this chart? Why do we care about this? Because all these prices on the right hand side here are denominated in dollars. So if you just draw a trend line, you can do, the mean reversion, you can do the best fit, whatever you want to do. You can make this actually into a channel, but you can see that the trend is definitely up and to the right. We have troughs, that's bear markets in the housing market, if you may, and we have blast off troughs, blast off troughs. So it looks like this is getting ready to blast off and melt up to the right. That's just what this does, because this is correspondent to the money printing. As the dollar gets more worse, your home gets more valuable. So the way to look at this chart, we're going to change the perspective. Remember, this is all in dollar value. So we have this here. If we want to denominate this in something different, so this is the median sales price of houses sold in US dollar value. Let's denominate this in Bitcoin USD. Let's use the all-time history, and then let's hit enter and see what we get. Now, this is zoomed in. This is on a daily chart. We were looking on a higher time frame before, but let's look on the higher time frame here. Let's look on the 3-month chart. So let's zoom out and make this chart make sense. Okay, so this is showing us something different. It looks a lot different. So remember what we just showed you. The price action is just back from 2010. Now, right here, we had the Bitcoin, or just the home value price going up and to the right, correct? So what does this look like? This looks like this is just going down and to the right. You can definitely draw a trend line down to the right. You can say that this, is trying to sort of cool off, but it's just sort of hanging on a cliff before it has a continuation to the downside. So look at this. As Bitcoin's inception, back in 2010, when you weren't paying attention, right here, this is January 10th, you had to have 81 million Bitcoins to buy a home. Well, that's impossible because there's only 21 million. So we're not even going to look at that data because that's not relevant. Let's draw a horizontal line where 21 million is. So you couldn't even buy a house with every Bitcoin in the world back then. So 21 million is right there. So everything that's relevant is underneath this orange line. And why is this important? Just so you guys understand changing your denominator in life. Anytime you're doing an investment thesis, anytime you're trying to denominate something in US dollars, if the dollar value goes up, you have to understand not just dollar value go up, a 5% gain over a year, you're not even outpacing debasement for that given year, so you're still losing in that trade. So say you have $100,000 and it goes up to $105,000 at the end of the year. After holding whatever asset for a year, it's a 5% gain, but the dollar debased 6 to 7% that year. You're still losing 1 to 2 basis points on that move. Even though the nominal value goes up, that hidden tax still doesn't give you that purchasing power that you had 12 months before. Understand this. So as Bitcoin has been getting adopted, let's fast forward to 2015. Right here, this candle body is around 1,120 Bitcoin. So if you bought a home in January with Bitcoin, you have to pay about a little over 1,100 Bitcoin. But fast forward another 4 years. So January of 15, let's go to January of 19. So let's back up a little bit. January 19 is right here. So look at, if you had 83 Bitcoin, so you see that this trend is definitely going down and to the right, and Bitcoin is demonetizing real estate in this scenario. It's demonetizing everything, but if you use Bitcoin as your denominator, this is what has been profitable over terms. Over time when you're trying to stack sats or stack Bitcoin and not dollars. So let's make this chart, let's stretch this out so we can actually see there's definitely a downtrend here. So if we can actually potentially connect these peaks here. Let's see, the trend's your friend to the end. Okay. So it looks like this come down, boom, boom. This is just a bump and run pattern that just keeps melting down. This is like not returning. This, you're not seeing this. Typically, if you came here, had this back test, had a continuation, it would have happened right here back in 2022. Like this bump and run, boop, off to the races, and that didn't happen. Came down and it fell down. How many more points? Let's see. From this peak, we came down another 84%. So my point is, from January of 19, let's look at January of 23. Let's fast forward 4 more years. January 23 is right here. 25 Bitcoin. And right now, fast forward, Bitcoin is at 3.6 Bitcoins per home. So what do you think is going to continue to happen as this chart just continues to stretch down to the right? Like, eventually expand this line, eventually in given time, in due time, we're going to be at parity with 1 Bitcoin is equivalent to the price of 1 home. So if you're storing your value, your wealth in an asset, if you bought a home and paid for it in cash, present day, or whether you're financing, whatever you did, and you bought 1 home, let's say $500,000 worth, and that home over, let's see, if we just use this trend line, this white trend line that I just drew down, this extends out to like January of 27. So if this continues down towards this, this mean reversion line, this means that we'd be coming down towards that 1 Bitcoin. So if you bought a house right now in Bitcoin terms, if this went down towards that 1 range in Bitcoin value, what are you losing? You're losing 70% of a Bitcoin. So just to put this in number, let's run the math really quick. So say you bought a house right here for $500,000. Just for number's sake, let's use an even number, 500 grand. And you bought that house in cash, right? Most people aren't going to do that, but just to say for this example, you did. And that $500,000 right now, if we look at the price of Bitcoin, is 114.1K. So let's divide that by 114.1K. So right now, that would get you 4.38 Bitcoin. Where, fast forward, once it gets in parity right here, you would lose almost 72% of this 4.38 Bitcoin as far as the opportunity cost goes. So if we do 0.72, that's 3.15. So you're doing 4.38 minus 3.15. And look here, that same 500,000 that would buy you 4.3 Bitcoin right now is going to be worth 1.23 Bitcoin. Meaning that if we multiply this by 500,000 in that scenario, that would be Bitcoin's price being around 615,000. So if it took 4 years or however many years for this to come down to that 1 parity, in this example, Bitcoin would be 615,000. Now, if you bought that 4.38 in Bitcoin and just held that investment, 615,000, once it gets in parity here, this is where the wealth generation occurs. That's $2.7 million. That house you bought for 500,000, it will appreciate, but it's not the fastest horse in the race. So when you go through your investment thesis and you have a full understanding from A to Z, these comparatives, and you run them, and you understand Bitcoin has demonetized everything. It's not just real estate. I'm just using real estate for this example. But if you want to do fine art, if you want to do land, if you want to do jewelry, pick your investment of choice. Bitcoin is the fastest horse. And this is what is happening right now. Years ago, they started out saying 1% allocation. Billionaires were saying 1%. Then they went up to 3%. Then they went to 5%. Now they're recommending up to 40% Bitcoin allocation, meaning that they understand where this space is going. It's in an S-curve adoption phase where we haven't even really hit that. People think that Bitcoin at 114,000 is expensive. No, that's having unit bias. Bitcoin's going to $10 million per token. So just do the math. That's 100x, roughly, give or take, a few X's between friends. 100x from where we are right now is where Bitcoin's going, probably over the next 20 years. And that's just based off the law of math. If you do the CAGR, what's a CAGR? CAGR is the compound annual growth rate. This is simple math. Here's the formula. This is given out. They use this in financial markets. So let's go to ChatGPT and just ask a few questions. What is Bitcoin's CAGR since inception on average? So what is Bitcoin's CAGR since inception on average? That's over 14 years of data, and it's just cranking out, doing all the numbers. Let's see what it says. Bottom line, it's about 100 to 200% per year, depending on how you pick your starting point. So we're not even going to use this range. We're going to use 20%. So this means Bitcoin on average since its inception over the past 15 years has given people 100 to 200% return year over year. That's encompassing all bear markets and all the volatility where they claim is bad, right? So with this, let's do a quick test. We're going to ask ChatGPT if Bitcoin is at 114,000 and has a 20% CAGR over the next 20 years, what would one Bitcoin be worth? So we're taking the low end and dividing it by 5 and just using a 20% CAGR. Over the next 2 decades, what would one Bitcoin be worth? Let's do some math. Understand the denominator is one thing, but understand how to use ChatGPT is another. Look at this. It does the math for you. You can't make this up. 20% CAGR over the next 20 years, one Bitcoin would be worth $4.37 million. So this is the importance of understanding not just Bitcoin and what it's doing and where it's going, but what's going on with the money. The Dixie, the DXY, they continue to print dollars. This chart looks extremely bearish. It fell through this macro support line back here. We were getting held up by September 2024. This was a macro support. We fell through, came back and hit our head once and twice, and this looks very bearish. Could the dollar be coming down to the low 90s? Yes, this is inversely correlated to the Bitcoin price chart. So as the dollar falls, Bitcoin is going to rise. And this corresponds with the business cycle, the Fed rate cycle, all things encompassed. When you're looking at the dollar chart, one has to ask themselves, will the Federal Reserve continue to print money? Well, yes, they will. That's what they've always done, decade over decade over decade over decade. So as long as the money printer stays on, then Bitcoin will continue to go up to infinity because it has no ceiling. Dollar has no floor. They can print as much as they want. We'll leave you with this right here, real estate versus Bitcoin. So in 2017, the average home price was around $337,000, and that was worth 24 Bitcoin. Fast forward 4 years, $414,000. So you did have an appreciation in that home, but look at the depreciation in Bitcoin terms. It lost over 50% of its value. Fast forward 4 more years. Business cycle, Bitcoin halving cycle, presidential cycles. Once again, it all rhymes. Average home didn't go up as much, but the Bitcoin got cut in half once again. So if this continues to halve out every 4 years, you see where this is going. Eventually, you're going to be paying decimals in Bitcoin terms for homes. If you don't get it, you don't get it. If you do, you do. And with that, I'm Sean with the Bitcoin Bros. If you guys like this content, go ahead and smash the like button. If you haven't subscribed to the channel, make sure you go ahead and show us some love, and we appreciate each and every one of you. And with that, I'm out. When you're looking at the dollar chart, one has to ask themselves, will the Federal Reserve continue to print money? Well, yes, they will. That's what they've always done, decade over decade over decade over decade. So as long as the money printer stays on, then Bitcoin will continue to go up to infinity because it has no ceiling. The dollar has no floor. They can print as much as they want. And we'll leave you with this right here: real estate versus Bitcoin. We'll leave you with this right here: real estate versus Bitcoin. So in 2017, the average home price was around $337,000, and that was worth 24 Bitcoin. Fast forward 4 years, 414 Bitcoin. I'm sorry, 414,000. So you did have an appreciation in that home, but look at the depreciation in Bitcoin terms. It lost over 50% of its value. Fast forward 4 more years. Business cycle, Bitcoin halving cycle, presidential cycles. Once again, it all rhymes. Average home didn't go up as much, but the Bitcoin got cut in half once again. So if this continues to halve out every 4 years, you see where this is going. Eventually, you're going to be paying decimals in Bitcoin terms for homes. If you don't get it, you don't get it. If you do, you do.